If anything sums up for me the distinction between US markets and European markets, it's tech versus banks. Tech, the biggest sector on the S&P 500. Banks really what makes up the bulk of the stock 600 as well. How important is this week, John?
Well, I think it's very important. If we get some kind of positive surprises out of banks in Europe, that could make a difference for the indexes there. But I think where it really makes the difference is the U.S. is likely to lead again, with technology likely surprising to the upside. It's one of the sectors that gets an awful lot of its revenue, almost 52%, as I recall, from outside of the U.S. The dollar's been weaker against G10 currencies, against emerging market currencies. Should be pretty good for U.S. companies.
John, when you think about the synchronized growth story, Europe versus the U.S., does it actually just come down to this? That Europe doesn't actually have many big tech companies. The United States does. And that's where the action is right now. It's in the tech sector.
I'm afraid so. I think that has a lot to do with it. Europe also has a lot of materials companies. It's older economy. And as a result of that, its indexes are going to feel it. In addition to that, I think the fact is the banks in Europe took much longer to come clean about their problems. I mean, my gosh, it's just in the last year or so, or the last few weeks, we've seen improvement in Italy. I mean, it
took some state aid, though, John.
It sure did. You know that. It's always going to take state aid with the banks, isn't it?